morning all, good evening, good afternoon. That was just one of our Aussie songs, Speak You Up, Powderfinger. I don't know if some of you have heard of Powderfinger, a great Australian band who has disbanded a few years ago, but that was Speak You Up. I think it's quite relevant in terms of what's happening at the moment in the crypto market, just to support each other and people that are down, to people to pick them up and make sure that people are reaching out to people that are going through a bit of hard time. Again, it's send out your messages, reach out to people, phone them, reach out and support them. At today's show, we'll just give a few minutes for people to join us. G'day Paul, g'day Philly, Xander, hope you're all well. Please, if you like a mic, come up, because this session here, what is real estate tokenization, is meant to be interactive, getting people's opinions in terms of around the topic. Around the topic today is the impact. What is the impact of the crypto market on tokenized real estate? Is the theme of today. Again, this session is only as good as the interaction. So we'll go through, obviously, in terms of this session's been recorded. Obviously, go through in terms of what is real estate tokenization, very brief, and then we'll go into the topic, go deep on the topic. Please, if you like a mic, let me give you the mic so you can participate in the conversation today. Reached out to a few other people that are heavily involved in cryptos, in the crypto market. So there was somebody that I do like his opinions on all things blockchain. He couldn't make it today, but he will be on our show in a few weeks' time. G'day, Quaddy, how are you? Hope you're well. As I said, please, if you like a mic, let me give you a mic if you want to come up and participate in this discussion. So this discussion, as I said, it's meant to be interactive. Around the topic. It's probably just while we wait for people to join us, just some of the things that have been happening around the place. Obviously, we've had, in terms of some people in our community, we've had, Matt, he's launching his Sporting Sharks, which is a play-to-earn game, NFTs play-to-earn game around in sports, the theme. So he's launching that in August, so he's had his podcast out there. Let's get behind him, support him. He's been a huge supporter of NFT artwork in the Ravencoin community. I think we always like to support each other in terms of whoever's doing what projects to get behind each other. I think regardless of what chain, I think Matt's decided to launch his on another chain, but again, he continues to be a massive supporter of Ravencoin chain. So he's got his huge collection of NFT artwork from supporting an artist, NFT artist. So he's got his podcast, having a bit of fun listening to his podcast in the background. G'day T, thank you for joining. Dale, thank you for joining us. Blockchain John, thank you for joining us too. So as I said before, just a bit of general chit chat before we officially start the session. Just waiting for people to join us. Give me a few minutes. As I said, please, if you like a mic, come up. This is an interactive section, so it's only as good as the people that are willing to come up and talk and participate in the discussion. G'day Annie, how are you? Hope you're well, Annie. Morgan, thank you. I know you are going to be in for a short while, but thank you for joining us. Again, great show before, Morgan. It was great listening to it, and some of the NFT artists, particularly ET, that spoke. It was great to hear ET speak. So I hadn't heard from you before, ET. So it was great. Obviously, we bought some with your art, NFT art, but hadn't heard you speak. So thank you. Thank you, Crypto Lisa, for joining us. Sunny, thank you for joining us. Just sort of general chit chat. Waiting for people to join in the conversation. It's as I said, please, if you like a mic, let me give you the mic so we can participate in this discussion today around what is the impact of the crypto market on tokenized real estate. Thank you for joining, Fix. Hope you're well. I do apologise if I missed anybody so far. as you're joining us. I'll say hello to you. But yeah, just sort of a bit of just talking some observations in terms of what's been happening around the place from different people in the community. It was great to see. It was great to see last week with Kevin Lynch his land artwork released as NFTs. So it was fantastic pieces. I actually spoke to Kevin. And again, the great excitement around in terms of his new collection of land art, which Sonny's been helping him with. So a fantastic job, Sonny, in terms of the great work you've been putting, helping Kevin to obviously realise the new world of NFTs and actually be able to take his great, fantastic artwork to the world via NFTs now. I mean, the thing is, we all know that Kevin doesn't need it because he's already a well-renowned global photographer across all spaces, entertainment, and in terms of beautiful art, land art, and so forth. But he knows this is the new world in terms of having more people appreciate his fantastic artwork. So great work, Sonny, in helping Kevin, bringing him to the Ravencoin community, and obviously helping him on his journey. That's been fantastic. So so that's a great excitement around, especially around the Ravencoin community, having Kevin and his land artwork involved in our community. Just some other observations that have been happening. Obviously, crypto market have been down. I think people just have to stay positive and look for the long term in terms of why you got into crypto. So stay focused, stay positive. If you haven't heard from somebody for a while, reach out to them to making sure that they're okay. Because I think at the end, the strength of community is also around when people are down, when things are down, to making sure we get behind them, and that's really the strength of a community, as to making sure we support each other during those bad times, not just good times, but bad times. So it's important that we reach out to people, and I did play my song before we officially started. Pick You Up by Powderfinger, which is a fantastic Aussie band. I think there's a thing named Pick You Up. I thought I'd have that song play. Probably finish off today's session with that later on with that song as well, just as a reminder. But yeah, Pick You Up was Powderfinger was a fantastic Australian band, and I was fortunate enough to actually sit with the family because I knew the tour manager. I was fortunate enough to sit in their last show in Brisbane, their Brisbane band. I was fortunate enough to sit with the family to watch their last show here in Brisbane on the river stage here on the Brisbane River. So it was quite an iconic moment for us. It's such an iconic band to be involved and go see their last show. So for those of you who don't know who Powderfinger is, I apologise, but they are a fantastic band. Obviously, I'm biased. Hey, Jake, how are you? Just invite you to co-host with me. So, apologise if I'm waffling, but we're just sort of sharing the experience of Powderfinger, given I've obviously played it here when the show started. How are you, Jake? You good?
I'm doing great. It's beautiful today. It hasn't rained here in like a week, so we got like a little drought going, but sorry I'm late. I was showing up like a couple minutes after because of work, but I'm here. I'm here.
Oh, good, Jack. All too.
You're doing good. Hi, everyone.
We always wait a few minutes in terms of help people to job. That's all good, mate. It's all good. When the sun's shining, mate, you got to take advantage. Where you are.
Absolutely. I just wish I could go to Chicago's beaches, but the lake is kind of nasty still.
Is that right?
Yeah, very polluted.
Is that right, really? Yeah, it's going to be like us here in Brisbane. We had a lot of rain, as I mentioned before. So we have a lot of the stuff, all the crap coming downstream, so making its way out to the sea. So there's been a lot of rubbish. It's been the same thing here. It probably doesn't look like it on some of the pictures, but I'll assure you, there's quite a few logs in that flowing downstream out the sea. But yeah, we're just sort of reflecting some things that have been happening around the community before we actually officially start the session. Any sort of observations, just in general, that have been happening that you've seen?
Like just in general with market, the world, stuff like that.
Yeah.
Well, this is a real estate space. Well, I'll introduce myself real quick in case anyone here doesn't know who I am. My name is Menard. I am Chief Financial Officer of RenewableBlocks and Project Manager for Dwell Homes, Inc. We are a custom home building company in Illinois, and RenewableBlocks is a renewable energy Bitcoin mining company based in the UK. So anyways, stuff that I've been focusing on recently in terms of real estate is trying to gauge the market trends and how, I guess, the recent rate hikes have been impacting home prices, home buyers, how the selling market is. And, one of the things I'm hearing a lot recently is, we're just talking about state of the world here, not really quite tokens or crypto, but being a seller, it's kind of peaking, but as long as you're being, given a fair price, you're not trying to gouge on the pricing, you'll probably still get a buyer, but you're not going to be getting 30 offers anymore because people have less cash in their pockets, inflation driving up prices of goods. But as a buyer, it's also a good time to buy a home. You're not going to be bidding in a bidding war with tons of people anymore. But the one thing that is really actually being impacted, which is funny based on the project Dwell Homes is looking to undertake, is rental prices just for apartments or condos or anything. They're up 40, 50, 60% in a lot of places. So that's kind of like the trend that I'm seeing lately, especially in big cities. But, it'd be good for us to touch on later what the state of the world means for security tokens, especially ones that are linked to real estate and property.
No, absolutely. It's interesting, that observation, which obviously we'll go deep in afterwards. But today's session, there's two parts I'd like to focus. One in terms of what is the crypto market, what impacts is it having on the tokenized real estate. Then the second part to it is obviously more from a macroeconomic perspective in terms of what's happening, in your country, our country, and also just as a global theme in terms of what's happening. Because I think there's a lot of similarities, Jake, in terms of, you mentioned that rental prices, in terms of how much it's going up, and obviously we know property prices have been going up. So there is a few similarities between what's happening there and what's happening here. So we'll go deep into it later on around that. But yeah, look, I probably should introduce myself as well because I haven't done that yet. So yeah, I'm Miguel Aleixo. I'm the Managing Director for BRIK BC Projects. We tokenize real estate property here in Australia, specifically focusing what we call Southeast Queensland, which is Brisbane, Gold Coast, and the Sunshine Coast, which is pretty much a 200-kilometre radius between the three areas, with Brisbane at the central, Gold Coast on the north, the Gold Coast on the south, and Sunshine Coast on the north, all on the coast here in on our state of Queensland. But yeah, we're focusing around A-class residential real estate, so what some people refer to as luxury properties, particularly between the sort of the $2.6 million and $3.5 million US. So that's sort of our niche that we're focusing on. But yeah, we thought we'd have this topic. And again, as I said before, people want to join, want to have a mic, please join the conversation as Jake and I talk about this topic. But in terms of people sort of been asking me in terms of, the crypto market's been down. It has to have an impact. What's happening in terms of you tokenizing real estate? I guess sort of the very black and white answer is no. It's not. Real crypto market is not impacting tokenizing real estate. Because what happens is the token's value is backed by the actual property value. So again, we know what's happening here, what's happening in your market, Jake, and around the world is that we've seen real estate property prices increase substantially over the last few years, particularly over the last 12 months, 18 months, and it's been crazy because obviously we've had the COVID in play, and we've had the massive increases in property prices, which obviously one of those factors has been there's been a lot of government money feeding people's pockets. We know that's been one of the factors, and but yeah, probably just to I know I sort of gave the answer before we go into the details as to what impact is the crypto market. What impact is the crypto market? Obviously being in a bear market at the moment. what is the impact on real estate, on tokenized real estate property, to be precise. Again, it just comes back to the fundamentals. And Jake, do you want to just probably share some of your thoughts around that? I know I gave the answer, but now we're going deep in terms of the fundamentals as to why it's not impacting the tokenized real estate.
Yeah, so, the first thing that we need to make sure everyone knows is the difference between a security token or property tokens and crypto in general. These tokens are built on top of blockchains, and they are separated from the native currency of the blockchains. These tokens are backed by real-world assets, and these real-world assets, then their values and the cash flows that are represented by the tokens. They aren't impacted by the crypto market. The crypto market could crash 90% in the real world, and the property that I'm backing the tokens with is still worth $1.2 million. But there still is speculation in the token market. So I would say that the trend or the price trends of these tokens typically like to follow the general stock markets as well. So even if your cryptos crash 95%, which a lot of them have. I did some math the other day on the top 200 projects. Majority of them are down 90 to 95% from their all-time highs. Excuse me. Your security tokens or your property tokens that are backed by real-world assets are performing much, much better. So that's kind of how I see things lately. And you can actually look at the security token market cap or property token market cap. Security token market team, the security token market team, they have like a good dashboard for tracking all tokens that are, being backed by real world assets and stuff like that. I think the market cap still has dropped, similar to the percentage drop that the stock market has gone under. I think the stock market's down about 25-30%. Security tokens down maybe a little more than that, but it's not nearly as bad as other cryptos. So that's my take on it.
Yeah, that's great. And I think that's, people just have to sort of go back to fundamentals when they're sort of analysing. And as you said, in terms of the property tokens, that's using the BRIK wallet. So there's $2.6 million cost in terms of this BRIK wallet property here in Brisbane. Again, we see that property going to go increase over time. So at the moment, the fundamentals, what's happening around the real estate. You've got, in terms of, we always look at demand and supply with any market. So here we've got, huge demand for real estate, but there's not enough supply to go around with people wanting. So, again, the drivers here in Brisbane is that we've got a lot of interstate migration, people coming from other states, and we've got people coming from overseas. Australians have been working overseas after COVID. They want to relocate back to their roots here in Australia. So that's causing a massive demand on our real estate market here. And obviously, we've got the Olympics, even without talking about the Olympics. The Olympics is in 10 years' time here, so that's going to always have a big demand. But the impact from the Olympics are actually not happening yet. They'll probably be more like in, say, 5-6 years' time. But again, to any market, it's always demand and supply. Here we've got massive demand, and this is why property prices keep increasing. So again, regardless of what the crypto market does, we continue to have a huge demand for property. And they'll continue, obviously, as Jake said, because the property token is backed by the property. It's always that there's that 100% tie in terms of what the value does around the property token. But it's again, the fundamentals. You always have to go back to fundamentals around whatever project you're investing in or buying into, to be more precise. And probably just make that just very clear from Jake and I, is this is not financial advice. We're not giving financial advice to people. This is just about us educating, providing information, and making people aware in terms of what's happening with tokenized real estate, and also just a bit of information around cryptos, because obviously we are involved in the blockchain related activities in our industry. So just making sure that's very clear that when people are listening, as we are here, but also they're hearing this recording, Jake and I are not providing any financial advice here. It's just basically general information. So just making sure that's very clear. But yeah, Jake, in terms of, you mentioned that over there in Chicago, obviously rents are going through the roof because of, obviously, it comes back to demand and supply. So obviously there's a lot lot of people moving to Chicago, obviously, given what happened with COVID, no doubt's probably playing a part in obviously causing massive demand for accommodation around it.
Yeah, so, the trend around here actually the last few years has been people have been leaving Illinois as a whole, mostly because of high taxes. It's kind of turning around a little bit, I think, but the rent is definitely going through the roof in Chicago. Even in the suburbs where I live, rents are probably up $300, $400 for just a one-bedroom unit. So, they used to be $1,200, $1,300, now they're upper 1,000s, closing in on 2,000 here probably in the next 6 months. It's not really like a supply thing. It's not really like an inflation thing, not really a state of the world thing, but it is a layer 2 because of the state of the world. So why would rent prices go so high all of a sudden, right? They naturally grow naturally. That's just how it is. Like I had a place in Chicago that went from 1,800 one year. Excuse me, I'm choking on a chip. So started at 1,800, went to 1,900 the following year, and then 1,975. That's kind of a big jump, but in Chicago, it was 2 bedrooms. It was a pretty big place. But I'm sure that place is going for 2,800, 2,900 right now, just per month. And it's mostly because of the lack of homes available. So I think what happened with the housing market over the last year and a half, not just a supply issue, it was the market coming to realization with how many people there are in the world and how few homes had been built over the last decade and a half. And that's mostly because of the housing crash that occurred. There was just no one building. So there's a massive undersupply of homes. So that's part one. Part two is home prices they went up, so people aren't able to afford them. So they're either trying to, if they can build their own, they'll do it, but that's really hard to do unless you pay even more for someone to build your own home. And you can't buy, you can't afford the regular home, so you're forced to go look for other things. Rent, maybe you go back to live with your parents or something like that if you're young enough, or if they're able to support you as well. But yeah, the supply side of apartments is just not able to keep up with the influx of people looking to live on their own, looking to have their own place. So the rent prices are just going up because the demand is there. Landlords are able to do that. That's kind of like my chain of events right there. What's going on?
Yeah, it sounds very similar to here, Jake. Because again, as I said, we've obviously the demand for accommodation here has increased. People obviously state migration and international housing is coming back. It's because of that demand, and basically rents here have been increasing substantially as well especially over the last 2 years. So again, we got people lining up for properties that they like 10 deep just to rent a property here in Australia, especially with homes, also with apartments, but more so with homes. And the average person now here in Australia is not in a position to actually even borrow money to buy a home. Especially if you're a young person, a young couple in their 20s, 30s that are trying to make their own life. It's becoming, well, you just can't. Just to give an idea, is that so if we go back, say, 30 years ago, and I sort of share this my story that our first home, we bought our first home. I'm talking about Aussie dollars here, but just gives you the same fundamentals around us. Basically, we bought our first home here as a young couple. My wife and I, Melinda, here in Brisbane, 25 kilometres out in the suburbs, and we paid $120,000 for a 4-bedroom home. Very basic, just basically the basic home in the suburbs, and that was $120,000. And I was on as a young accountant making my way in life. I was on $25,000 in gross income a year. Now you fast track to now, almost 30 years later. That was 1994. Fast track 30 years later, just that same house is now $880,000. Now that the same young couple like we were starting out in terms of, just say they were an accountant. So the wage is probably around $60,000. It's not even double. So that property's gone 7 times its value. But the wages haven't really gone up that much. It's only gone up probably, say, 2.2 times from there, so probably around $55,000-$60,000 for the same person today. So again, it's just becoming out of reach. So even if you come up with a deposit, to be able to service a loan for that sort of property is so hard for a young couple. And I guess in terms of this is why we're doing you, Jake, me, in terms of our colleagues that are tokenizing real estate. This is obviously the solution we were trying to solve when we started looking at tokenizing real estate, is providing access to property to anybody, regardless in terms of whether you're starting out in life or you've had some issues in your journey in your life, and you're not in a position to go and borrow funds to buy a property. Now you can actually start buying real estate, access to real estate by starting the journey again, or never have, or you're about to start for the first time. So this is why we're doing what we're doing. But yeah, it's just to sort of give you those observations over the last 30 years here in Brisbane. And I'd say probably very similar to you, Jake, in terms of there in Chicago, in terms of wages haven't gone up that much, but obviously property values obviously gone up substantially, right?
Yeah, Illinois has been one of the states that has really upped their acceptable minimum wage over the last 5-6 years, or not even that much, maybe like 3 or 4 years. It's still behind the curve in general where they should be, but salaries in general have not kept up. Minimum wage has kept up for the most part, but not a lot of people are getting minimum wage. But minimum wage doesn't really help you, be able to purchase your own properties. And that's for sure. You're not going to be able to. If you're making minimum wage, you're not buying a $600,000-$700,000 home. You may want exposure to it, but there's just not that type of tool out there in the legacy markets, right? There's not enough liquidity. There's not enough opportunity. The structures aren't there in order to expose yourself, at a minimum wage type of lifestyle. But that's where property tokens and tokenizing real estate come into play, right? You can purchase just a few tokens and you have exposure to these properties. And if you even recognize the value of real estate and its potential in the future, especially because of scarcity, populations booming around the world, right? This isn't just strictly set to where you live, right? You can definitely expose yourself to international land property. So, yeah.
Absolutely. Absolutely. And when we start talking some of the macroeconomics that's happening at the moment, obviously with interest rates rise, I think it causes quite a few concerns for the everyday person who's trying to get into real estate, and obviously concerns around the interest rates. Obviously, we had 0.5% increase 2 weeks ago. I know you guys in America had 0.75, because I thought 0.5 was fairly aggressive by the Reserve Bank here in Australia, our federal bank. And I think when the Reserve Bank there, what you call the federal bank there, which is the same as ours, you guys went 0.75% interest rate rise, which I thought, geez, well, that was very aggressive. But I think the old days of governments or through their reserve banks controlling inflation, I don't think it has an impact anymore. That lever of controlling the economy, controlling inflation by using the interest rate lever no longer works anymore, because we're talking about a different world now. We're talking about properties that are, if we go compare 30 years ago, as we were saying, and, you're comparing to properties that now are 7 times more valuable, and the amount of loans that are required to buy these properties are far much greater than they were 30 years ago. And I don't mean to be sounding sort of, I know I'm almost about to hit 50 years old this year. I don't mean to be sounding old and talking about the old days. But I think it's important to know the history in terms of where we've come from to sort of understand where we are today. And obviously things change. Even the very fact in terms of how they measure the CPI, how they measure inflation. We've got a different basket of goods now and things that we consume every day compared to 30 years ago, even 20 years ago. But they're still using the same basket of goods to actually measure CPI, measure inflation. We're consuming Netflix, we're consuming internet, we're consuming so many more things that we need in life these days compared to 30 years, 20 years ago. So I think even the even the real inflation figures that they state, I mean, ours here is at annual inflation rate, we're sitting at 5.3 as for last March quarter. But, if you were to actually factor in what that figure should really be, the real figure of inflation, I think you'd be talking more like 6.5%, 7% in my view. And again, I'm talking because obviously I've got a CPA background, CPA accountant in Australia, and obviously I do have a bit of an understanding in terms of the fundamentals of macroeconomics. So again, it's, and I'm sure over there, Jake, in the US and even around the world, in the UK and Europe, I'm sure it's the same thing in terms of where inflation sits. And I think US probably more so, because obviously you guys have been printing more money than we have. I mean, we've been printing money, but I think US has probably been another level in terms of printing money. And I don't think any government can really control inflation anymore through using, the interest rates to be able to control the inflation rates. So, what are your thoughts around that, Jake?
Sorry, the last sentence. Could you say that one more time?
Yeah, no, I was just saying in terms of any government around the world trying to control inflation through interest rates, and in terms of obviously the reserve banks, by using interest rates to control inflation, I think that's a thing of the past. It's no longer a lever anymore, because we live in a different world in terms of, especially with loan ratios, with the loans, given obviously the higher values of property, and given what loans people have to take out, it doesn't impact anymore. Especially with, there's a lot of cash in the economy, given after all the government grants and so forth that government's been pumping out. So in terms of government controlling interest rate, controlling inflation through interest rates, do you think this still has an impact, or is it a thing of the past?
So, it is a tough question because of how dynamic of a world we live in right now. Sorry, I'm still choking on that one chip.
Oh, good
So the Fed trying to control inflation and control just everything with interest rates. It is a very linear system that they're working through, and there are a lot of external factors that have to do with everything. But banks are trying to make things more affordable for everyone, regardless of inflation, regardless of what the Fed is trying to do in order to raise interest rates and trying not to let everyone throw money everywhere, all this and that. And one more thing, earlier when you were talking about what is the real inflation rate like in Australia, right? People say here that the real inflation rate should be in the double digits. Right now it's, I dare I say it's only 8.7%. It's probably closer to 13, 14, depending on a few factors. But anyways, go back to what we were talking about. One of the things me and my dad talk about, he's the owner of Dwell Homes. We talk about the 40-year mortgages that some banks are offering now. So that's gonna, help people out. I mean, no one's gonna be going for 40 years in a home, honestly, unless you're 20 or 30 and you're planning on living there your whole life, or you're gonna hopefully be able to pay off that loan sooner. But there's longevity being built outside of what the Fed is trying to do. There's also the variable rates, the 10-year. It's like 10-year fixed, and then after 10 years, there's variable rates. These are very dangerous, though. It is offering people lower rates for 10 years, and then wherever the rates are at after 10 years, you're stuck with that. So it's like you're hedging yourself a little bit, because maybe rates are high right now. So right now, would it be the worst time in the world to go into one of those 10-year fixed and then variable rates? But it could, in 10 years, who knows what they could be. So it's a little risky, and it could be another decade until, we see a bunch of foreclosures, people not being able to pay their mortgages because of the fixed rate problem, people that were going into the 40, 50-year mortgages. Yes, 50-year, that will be a thing, that people can't, that they thought they could afford and they just couldn't. The Fed, they're doing what they can with their rates and how they're controlling everything, but it's too dynamic of a system right now. There's too many variables. There's too many new things coming into play for how people are managing their loans.
Yeah, it's a very dangerous world in terms of the way they're kind of aggressive on 0.75 of the US. I think, given obviously we've got a lot of first home owners coming to the market. I know we've had here. And if we had to, over the last 3 months, there's been 0.5 and 0.25, so we've 0.75 over the last 3 months. So any person coming into the market for the first time, buying their first new home, quite a dangerous. I mean, 0.75 might not seem much, but that's around in Australian dollars around $20 a month extra on for the average loan for a first home buyer, which is actually quite substantial for a young couple trying to make their way in life. And obviously the cost of living is more expensive and so forth. So I think it's a very dangerous world in terms of, because people have been used to pretty much such a cash rate's been zero, right? In our case, pretty much close to zero. So it's a very dangerous space in terms of them going aggressive, because you can just see if they continue this, there's going to be, I think, a lot of closures, especially in the people who've gone in and bought, in terms of first home buyers. But yeah, we won't sort of get too bored around the interest rates, but probably just move on to the topic. We're still focusing around the theme. I've had this question asked to me, and I know probably you, Jake. I know you obviously you mine Ravencoin and Bitcoin. I know you're a miner yourself, but I thought I'd just sort of chuck our attention to the blockchain. I've had people ask me, so well, the cryptocurrency, the crypto market might not impact the tokenized real estate. But what happens if something like, say, Ethereum, again, using very extreme situations here that someone asked me, that what happens if the Ethereum blockchain was actually, they decided to close it up for whatever reason? Again, we're talking extreme here, and people can't mint on the Ethereum blockchain anymore, because obviously, as you know, we started off on the Ethereum blockchain minting our BRIK wallet, and obviously we've switched to the Ravencoin blockchain, where we're tokenizing the second series and beyond, all on the Ravencoin blockchain. And I've made that, obviously we've taken at length in terms of why we switched, and obviously the issues with Ethereum and what have you. So I won't sort of go into that, why we switched. I think it's been quite spoken enough about. But more in terms of if the Ethereum blockchain was all of a sudden they decided to close it up, nothing else can be minted on the Ethereum blockchain, or basically they close up the blockchain, what happens then? What happens to your BRIK wallet tokens on there? So again, it's something that obviously whenever you start a business, you always look at your risks. You need to identify your risks and making sure you've got answers for any risks, that you can mitigate those risks. And basically what we've said is basically, because we are custodians to people's property tokens, the BRIK wallet tokens on our platform. If for some reason they decide to close the Ethereum blockchain, well, you know what? We can just actually move that onto the Ravencoin blockchain. Just easy as that. A bit harder, obviously, if platforms, again, we're going to, again, when I say custodian, so basically when people buy and sell their tokens on our platform, the BRIK wallet tokens, it stays on a platform, so it's off-chain buying and selling of the BRIK wallet tokens, so it's actually on our platform. Our platform that was created by DigiShares, and they maintain our property tokens platform. So again, that's how we would address the problem. And again, as I said, we just basically switched the same. People's numbers stay the same as far as the holdings of BRIK wallet, but it'll just be on a different chain, it'll be on the Ravencoin blockchain. And I know that sounds a bit centralized, but again, that's at the moment, the first couple of years, because these are long-term assets, it needs to be, we need to make it easy for people coming in for the first time. And I think we made a decision that we were going to custodian people's BRIK wallet tokens on our platform. Probably chuck on to you, Jake, in terms of, again, that was the question I had. I'll get your thoughts around that in terms of, if for some reason, whatever blockchain people are tokenizing on their property tokens, what happens if the blockchain was actually closed up? Get your thoughts on that. That's the question I've actually had.
So I have a perfect answer for this. So when we had our initial meetings with T0, I discussed this with them, because I always think doomsday scenario. Like when I was going for my wedding venue, I asked the people, what happens if there's a freaking tornado on the day of our wedding? Like, is there something out there for that? And they go, well, it's under the acts of God clause. I'm like, okay, cool. So I talked to T0 about, what happens if the blockchain were to go under, or something like that. Some doomsday scenario where we have to figure out how to retain the tokens and make sure everyone that has had the tokens is able to get their ownership on to a new platform. Well, so first off, they said that they would be able to work with us on, transferring the tokens to a new blockchain. That was one. Two, because in order to own securities and security tokens, anything like this, you have to KYC. We have holder on record. We will have record. What's the word? Just records of information on who's owning the tokens. So we will know who owns what and their contact information. So we're able to reallocate the tokens out of the new blockchain. The solution is actually very simple. It is not definitely a solution you don't want to have to implement. Okay, I take that back. It's not simple, but the steps are it's linear, right? There's not a lot of what ifs. It's you take the records of the token holders, and then you transfer that to the new blockchain, and the new tokens are theirs. That's kind of the process behind it. The only thing you have to account for as the person or the company or entity that is minting the tokens is, paying for the new tokens onto the blockchain. So if you're going from Ravencoin to Ethereum, you're going to have to expect, oh man, here comes this big gas fee to implement the smart contract for the tokens. If you're going from Ethereum, let's say Ethereum went under, and now you have to go back to Ravencoin, you're going to go, oh, this is easy, it's cheap, awesome. So I'm a little biased, but yes, that would be the preferred way to go. If I was originally built on Ethereum, I would hope that if a blockchain were to fail, that it is the Ethereum one, and I can go to Raven or someone else and not Raven to Ethereum, because it is a lot more complex, a lot more expensive. And, you have to have a audited smart contract and all this stuff. So that's my 2 cents on that.
Yeah, it's great, Jake. Because it is. It's questions people ask, which is, and so they should, because again, this is, they're relying on us making sure we got the solutions and the answers in terms of if some of these events happen. Obviously we're talking about very extreme, but I think you always need to consider those extreme risks to making sure you've got a solution for it. So, again, when things are down, obviously with the crypto market, that's always things that people sort of do go extreme and ask those sort of questions. And as I said, and so they should. But yeah, that was just sort of an interesting question there. And basically, the way I sort of explained in simple terms was basically, in terms of more about on the selling, in terms of selling the tokens, I sort of compared to, say, eBay and Amazon. Just say, we got our property tokens that we're selling on eBay, and basically eBay's price goes up and down. Well, there's no impact on the actual tokens on there. eBay decides to shut down. That's okay. We'll just move those tokens to Amazon and start selling on Amazon. So again, just using that analogy in terms of trying to describe it in very simple terms. So again, it's the bottom line is that there's a solution that it can be moved to another chain if somebody's an extreme reason that particular chain that you're tokenizing on was to close up. So, but yeah, we're talking about extremes here. But,
yeah, absolutely. And, I think an important thing to note is, for anyone listening to this now or in the future, is security tokens existing on a blockchain, the right blockchain. It's not like listing on eBay. And you said that. I would just like to clarify what, they actually are, right? So they're, on Ravencoin at least, they're UTXOs. These tokens, they're immutable. Nothing can go backwards. There's no central entity like eBay or Etsy or Amazon that could remove your tokens and, now you don't own it or something. Once those tokens are in your wallet, once those tokens are minted and under someone's control, they own them, right? As long as their address is KYC, or whitelisted in the case of a smart contract. So that's the important thing. That's the main difference of a blockchain that is offering tokens or the traditional market. I see a lot of people actually recently talking about security tokens and why would you try to bring the stock market to tokens? Like, what does that even add? And sorry, I just dropped my phone.
Okay.
So the thing that I want to tell people, but it will go over their heads, so I have to kind of I guess not dumb it down. I have to simplify it. That's the word, simplify it. It's the matter of self-custody of your assets, not, someone else is holding it for me, I own it on paper, right? Like, I can go buy 100 shares of Apple right now on Robinhood if I had the money. But no, for real, I could go buy 100 shares right now and I quote-unquote own them. Do I really own them? No. There's a really long, inefficient, bureaucratic process maybe not bureaucratic, but it is very inefficient and very slow to get the shares, the certificates, the stock, or whatever it is to my house. Like I would never go through that process on my own. But on blockchain, it's very simple. The tokens exist. You send them over the decentralized network, the one that they're not going to block your transaction. Everyone's in consensus to let your transaction of your tokens go through, and boom, you own your asset. You have proof. You have proof that you own the asset too. It's like you can pull it up, show that you have control. Blah 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 blah. It's very cheap, very fast, very efficient. That is the thing. Self custody is the biggest thing. We are not seeing really any of that being implemented yet. Like on T0, they don't have self custody options. That was another thing I talked to them about, was self custody of the tokens, because that's like a goal, right? Bring things back. The tokens exist on the chain, but bring things back to the custody of separate users on the main blockchains, not owned by one entity and then they're trading them on paper on a layer 2. Right now, we're kind of at that place where we're stuck with the layer 2s, and you have to work, and we're going to have to work with the layer 2s like DigiShares and T0 to get them to implement self-custody, which is as easy as providing the receiving address and having the person pay for the gas fees to send the tokens over the chain. It's really it. So, sorry, I just went on a huge rant, but it's something I think about a lot.
Yeah, that's some great points there, Jake. Some great points. I mean, as you know, we decided for the first 2 years that we'll custodize the tokens, the property tokens, on behalf of, it'll be on the platform, be on their people's accounts. Obviously, they'll be KYC'd on our platform, and they'll be held in there. So when they buy and sell, they're actually buying and selling off chain. So obviously, the actual tokens themselves, all of them actually on chain. But in terms of buying and selling, it'll be off chain. Well, the Ethereum ones. The first BRIK wallet will be basically buying and selling off chain because of the one, gas fees, and two, I think we also want to make sure that people coming in for the first time is just like going into a website, signing a subscription for an account, and off they go, and don't have to worry if they lose their keys. All of a sudden, they've lost. They can't access their tokens. So our objective was to make things easy as possible for people coming in for the first time into no experience with blockchain. We just want to provide that easy experience coming in for the first time with the blockchain in terms of only property tokens specifically, where they can just sign up in our account in our BRIK BC property tokens platform, so subscribe to KYC, and they're ready to go. And then if something happens that if they lose their password, we just give them another password. So just making sure that experience, especially over the next 2 years, is easy to people to come in. Beyond that, they will review in 2 years' time when people are more comfortable to self-custody their own tokens, and they can take them to their own respective wallets outside of our platform. But we're here for a long term. In terms of our journeys, are long-term held assets. These properties are being held indefinitely. So we also make sure people come on a journey and stay us on the journey for a long time. So we're here. We're communicating every week with people, so making sure there's an active community around the BRIK family, to making sure people always know exactly what's happening. So that was our approach, because we are still very early in terms of and people's. That was if we go back, say, 10 years ago, my biggest scare. My biggest, worry and stress was actually having cryptos because back there was no centralized exchanges, no crypto exchanges. It was basically you pretty much had to hold your cryptos in your wallet, in your laptop. And I'm not an IT. I got basic understanding in IT, but I'm not an IT. I don't code. I haven't got that deeper understanding. So my biggest stress 10 years ago was actually losing my keys to my wallet on my laptop. So that's why I never really went there. But again, it's obviously it's a matter of providing that ease of people coming in for the first time, and making sure there's comfort that they know if they lose their I'm talking here more precisely from real estate tokens. Obviously, when you start talking about other crypto projects, things can be a bit different, because you want to go in and out, and obviously there's always things happening. But I think when we talk about the actual property tokens, that's our approach we've taken to try and make things easy for people coming in for the first time. But yeah, look, it's we're sort of in wrap-up mode now, as we sort of trying to keep this for now because there's Sunny's got her show on next. So to make sure that gives us time to go across to her show. But yeah, look, in terms of the topic today, I think it is very clear that the crypto market, the bear market at the moment that we're in, has no impact in terms of property tokens, real estate tokenization has no impact because at the end of the day, as we said, the value of each property token lies in the value of the core asset, which is the real estate property. So just always making sure that there's that understanding in terms of how that works with tokenizing property on the blockchain. But then just sort of go to wrap-up mode. Anything from you, Jake, before we start wrapping up?
No, I think I've had enough rants for this space. I hope people come back and watch this stuff. I know I talk a lot, but the stuff I talk about is stuff that is on my mind a lot, and it is hard to put it down, into tweets and stuff. So not everything I talk about on tweets are things that I like to speak about in these spaces because the topics are very, very niche, right? But they're important because they involve how the financial world will eventually transition and how it should transition into blockchain, not just, these tokens are your stocks, that's it, right? There's ways that it has to work, or else we're not actually using crypto for what it should be, which is decentralization of your money, decentralization of your ownership.
Absolutely. No, I love, enjoy your content you put on your tweets, Jake. Very informative, especially from a Ravencoin community perspective, Ravencoin blockchain perspective. I always enjoy reading your tweets. But yeah, sometimes it's hard to, again, we've got limited characters on those tweets, so it's always hard to sort of try to get the full message across, right? But I really enjoyed the content you put out there, mate. Really, both from a Ravencoin perspective, obviously in terms of just in general stuff that you put out there on your tweets. Real fantastic content you put out there. But yeah, look, it's as I said, just making sure that we wrap up so we can get across to Sunny's space session next on Twitter Space. But yeah, just finally, so actually we do have some. We've got tonight, later on today. We've got a BRIK Q&A that it'll be done simultaneously around more from a perspective of tokenizing real estate and what the impact on crypto, more from obviously specifically BRIK koala perspective and in terms of what we're doing. But we're trying something new today. We're going to run it simultaneous. So Twitter Space and Discord session running side by side. Where both audience can hear each other talk. So give that a try, see how that goes. So that's on later on. 6 a.m. So Thursday, 6 a.m. US Eastern Standard Time. That time, but we'll put it up there. Also, we've got an announcement coming on later on this week. Some collaboration we've done with Kevin Lynch. So look out for those details that we're going to put out the full announcements. So some exciting news from that perspective. Any announcements for you, Jake, that from your perspective before we close up?
Nope, we are all good. You know what? Yeah, no announcements. I tried to think of something, but there's nothing. I will make announcements when they happen, that's for sure. I do that. We are moving steadily along with all our projects, though. That's good. It's a good thing. Everything's going smoothly.
Fantastic. Thank you for that, Jake. Thank you for your help me today. And I hope everybody enjoyed the content today around the topic. And again, we do this every week with a different theme every week. And today we all were special guests today as part of today's session. But we do try to have a special guest every week. So we've got some coming up in the lineup the next few weeks. So thank you all for joining us. Thank you, Xander, Blockchain John, Annie, Menard, thank you for joining us, and all the other people that have joined us. I think they probably jumped across to Sunny's session, prep for his session, so I'm going across there now. So thank you so much, everyone, and stay safe. And thank you, SOS, who just popped up again. Thank you, guys, and have a fantastic day, evening, morning, depending where you're at, and stay safe. Bye-bye for now.